All right, welcome everyone to the Hurley Investments Trade Findings Adjustments for Thursday morning. We are going to hit an ugly market on what's happening and why. And I'm going to go over just some things that occurred or that I've been hearing as of recent. So let's start off with right now, today, markets across the globe are down between 10 to 13.3, 13.4%. So it's down. It's down. And what is it down on? My opinion only. Coronavirus. And just as a question, who is going to stay in the market over this coming weekend? If I was to ask that question, who's going to stay in the market this coming weekend? What do you think? Who do you think? I love it. Great answer, Mary. Nobody wants to, which means what is our expectation for Friday? Someone typed in fact, if I can just give you credit, Abraham typed in, graphically, the most similar drop in the XPX I found is in August 2015. How far will this go? I have no idea because it's new. Agreed. Not everyone can simply exit, which is true, but our expectation for Friday is probably another 1,000 point drop. Why? Rebalancing of portfolios, end of month, tax selling. People don't want to stay in. So there you go. It's that simple. It's going to be a bugger. So with all this said, if I can just take a quick peek, 20,000. Market's down 2%, probably 1.8, right? 1.4, we're down 20,000. Let's do some math. 20 divided by 12,700. We're down a 1/15 of 1%. A 1/15 of 1%. And yesterday we were down an 1/18 of 1%. So my expectation, my wants, expectation / wants at Hurley Investments. Burn, baby, burn. I want our markets to crash. I want us to make up for all of the expensive QE that we did. I want to pay the price for all the poor government-run stimulus and government-run everything, in all honesty. I want the market to reset like it should have in 2008, even if that affects my home price. I want it, and I really could see it pretty easily being down 40%. It's just taking out stimulus, excuse me, in which obviously the Fed can change that by adding it back in. But I see a light at the end of the tunnel. Will someone tell me what is the light at the end of the tunnel? What is the light at the end of the tunnel? So let me tell you what it's not. It's not tax selling. It's not going to be April earnings. It could be June earnings, but most likely the summer doldrums probably won't be then either. It won't be the election cycle. What's the light at the end of the tunnel right now for 2020? What's the light at the end of that tunnel? Okay. You said Trump is president, and yes, I would say the re-election of Trump, right? He's been good to the market. He's been good to business, cutting regulations. Yeah, I mean, that's a light at the end of the tunnel. So we literally could be down 40%, if not more, till November, and we might only have a 15% down year. A 15% down year after 28% up year last year, right? That 15% will basically eat away all the 20%. And that's it. A very interesting comment from a very smart trader. I've known ADP here for forever. Measures are being taken worldwide, and China number on corona is starting to drop. So in a couple of months at most, it'll be over. With that said, my dad's about how earnings will be affected in the wide economy. So Abraham, it'll be over in China, but it most likely will not be over in Europe, in the United States, in Canada, in South America, and who knows how it might affect the Middle East, Russia, or Africa. So I agree with you. Almost over in China. And probably, would you give it 4 more weeks? You say 4 more weeks, it might be more controlled and we'll be comfortable in China? I'd probably say yes, right? Which means for all due purposes, that's lasted about 3 to 3.5 months, where it's kind of just starting here in the US. Push that out 3 months out in time, we get back to those June earnings and I say, we'll probably suck and we'll have the summer doldrums. We've got a lot going on for 2020. Road bumps, and that's all they are, road bumps. Tax selling, coronavirus, running through Europe, US, Canada, South America, Russia, possibly Middle East. Now with what, Iran's vice president getting it? US earnings next 2 quarters. Summer doldrums. Election cycle. That's all that we have running up between now and, what is it November 5th? when do we most likely have our elections? November 3rd, so it'll be November 4th. November 4th, we'll all be there. Wicked next 8 months. It'll be wicked. So let's see. I've got some things I want to talk to you about. So this is why when you don't see a flashing opportunity to put your money to work, go ahead and keep cash available. Cash is king. A couple people have asked me, Kevin, I've got a lot of cash in my portfolio. Thank goodness you do. We're going to have opportunities. And in all honesty, that cash is your protection to add long puts, to use for bills, to dollar cost average at prices we've seen back in 2017. It's an opportunity. I talked about one day shouldn't make or break your portfolio. Let's see where I have it. I thought I had it in here, right? Going through my stuff. One day should never make or break your portfolio. Yes, I was pissed off on Monday. For all intents and purposes, on Monday, I got my ass handed to me. That happens. The probabilities did not work out the way they were supposed to. On Tuesday, we were supposed to have a bounce. But I already started to add protection. So Tuesday, we did a great job. Tuesday, we, under mostly the same market condition, we cut our losses in half. And today, compared to Monday, we're doing even better. In fact, there's a hell of a chance if we could get down about 900 points, there's a hell of a chance we'll be profitable today on a 3% down day in the market, which for all intents and purposes will completely make up for what we lost on Monday. Against the market, we're making up half of the downward movement on the market. You're not down 10 to 13%, you're beating the market, but we're going to keep doing better as the market keeps going down. We've positioned ourselves to be in that direction, which means, what about leaps? Leaps itself is protection because we don't use 100% of the cost of the stock. We use somewhere between 7 to maybe 12, 13%. Our plan is to still dollar cost average. I can use single long put straight to strangle, but right now we are in QQQ, SPY, long puts, and or bear puts. So the question is, hey, all of this you put on, what does it look like today? And today, it looks like this. Where's my total? Hold on 1 second. Yeah, notice how that's off too. Notice how the year-to-date 77, not 840 something. They've got $70,000 messed up there somewhere. $80,000. All right, let's look at the SPYs. Pretty good, plain and simple. Some people are in the SPYs as just individual positions, just letting it get its butt handed to it. But making up 29,000 of the downward movement, that's going against our leap positions and accounts. Let's take a look at some of this. We're almost ready, I think, for another position to go in. We're going to get below those shorts. We're pretty close. At the money's 307 right now. So, walking you through my thought process. We get down to $302. It's really going to be closer to 305. We're going to add on another bear put position here. These are 305s. We've got some right now that are 313, 310s. I don't know who those are, but we're going to have to get these widened out. And I like positions that we're in. But 305 is the next rush down where if we break that, time to add more protection in place. On our Qs, so erase this. On our Qs, where are the Qs? Come on, Qs. Qs are up the other way. Our protection side is down here. 5,000 on the 217th, 205s. We have a put vertical, short bear put. This one will make its maximum profit. We have some straight leaps out there. I guess some straight longs out there. But really on these ones, when you see them get to 205, it's going to be time to put some more positions on at that point and keep laddering down. That's the way that I'd go for it. I do have access to the Thinkorswim platform, Abraham. It's just overly complicated. So at 210, you're going to see us go through and probably continue the bear put from 210 down to 200. And that's where we're going to go on our Qs. Just keep doubling up. With that said, today, what else do I have here? I've taken some notes. Baidu, let's talk Baidu. Baidu has their earnings today. So we have taken profits on the way up on some Baidu positions. I'm going to primarily go with the June of this year. Just so everyone knows, all of the June of this year, these 55 are 100% paid for 2 or 3 times over. So what we'll most likely do is take off half of them for a small profit and let half of them run into their earnings. We already know they're going to have a good top and bottom line. It's if their guidance can answer. The profits from these, when we take them completely off, will be rolled into the January 21 150s, or probably more importantly, the January 22 150s. We kind of want to get through this year. So we're really looking to move profits there into January 22 and to take our January 21s and move those also into 22. Yes, we do have protection in place on the stock ownership, but that will be in earnings today. And definitely, Abraham, go ahead and send it to me. And it'll be very interesting to see where we end up. Kevin, what if we get a big bounce back day? So for example, right now we have added Bank of America, leap long puts on keep saying leaps. We added long puts on Bank of America. We now have 2 sets in place, basically. We have 32 and we have 29.50. As Bank of America broke 30 today, most likely it's going to go back down to 27.50. So because of that, we've got protection in place. We'll play it continuing down, most likely tomorrow. Disney, we've got 2 sets of puts on Disney. Really helped us out yesterday, significantly. Nothing like making 43 cents on every dollar down on Disney. Kevin, when are you going to pull this off? When are you going to take your profits? Well, Disney most likely should go down and touch 117.80-ish, 118. That's when I'm looking to take my profits from Disney. For the stock positions, we're making 224, we're making 201 on $1.44, we're making $4.25 on $1.38 down on Disney today. I like being up on a stock that's down. Apple, probably going to have to do the same thing with Apple. If Apple can't hold 280, time to get some more protection on Apple. Chase it on the way down. It's just, man, we've got such an amazing opportunity for some of these positions, and we'll just keep playing them back and forth. We're going to play the little ups and downs. It's going to mean for a much more nimble 2020 is my best way to say it. If I can run back to Baidu, no, let's run to Disney. Let me stick with Disney. We do have some Disney calls here in place. My rule of thumb is when they lose half their value, we dollar cost average them. Be able to dollar cost average this one pretty good. April 2020 is toast. Those are most likely gone. I don't think those are mine though, so to speak. Deal dollar cost all these ones out to January 21. Coronavirus should be behind us. Instead of being able to double up, I might be able to triple up. I really would like to dollar cost average the 135s at $4 and then lower my overall cost basis to like 680. I would really like to take these 150s and get them down to $2.50 against $10, have a $5 cost basis on them. A lot of opportunity is available here if we just sit back and be patient and don't freak out. Questions. What questions can you guys or would you guys like me to answer for you in regards to today, the movement, what our stock market's doing, how we're going to continue to attack our coronavirus U.S. market. And ADP or Abraham, I'd love to see that. Send over that info. It's catching my interest. Kevin, what could you have done on Monday to not get caught behind the 8 ball? Again, I answered that on Monday's commentary, but Lance, that's a good question. I could have rolled protection. Now, there was nothing technically that told us we had to. There was nothing in the news that had changed on the coronavirus that told me I had to. I don't just do stuff for the hell of it. That's gambling. So because I don't just do stuff for the hell of it, I did not do anything. I didn't push it. I didn't roll it. I just didn't. I wouldn't have done anything different. If someone would let me see where we would have been on Monday, on Friday, I would have done that. But there was no trigger. There was no point. I'll be honest with you. I hear the BS on the talking heads on the TV. Oh, we went up so far, so quick. Well, God, we did that multiple times last year. We did that multiple times in 2018. It's like, duh. Let's face it, I wouldn't have done anything different. You are going to have some times when you get your butt handed to you. I didn't in 2018 for flash crashes. And what, a year ago in February when the market fell 1,600 points? Because we were protected for earnings at that point in time. This earnings expiration took off most of the January earnings protection here the last third week of February. It happens. Instead of trying to figure out ridiculous, stupid, what are you going to do? How are you going to read the market? How are you going to see the future better? I don't even waste my time on it. That's a stupid thought process. What I'm going to do is figure out how to make it up. And that's what we do. And I'm going to choose to make it up versus tell you, oh, don't worry, it'll come back. What are your options? Go sit in a fund. If you really don't like market volatility, I can get you into an annuity that'll completely protect your money. And the funny thing is people say, oh, well, annuities are so expensive. All these dumbass funds are just as expensive, if not more expensive. If you don't like an annuity because it's so expensive, why the hell are people in funds? It just doesn't make any sense. So we're actively looking at positions. Lance, I know I'm kind of going off on you right now. We actively look at positions. No, I wouldn't have done anything different unless someone could let me see the future. But what we do is find those ways to make up where, in all honesty, protection wasn't on. It had expired the Friday before. So good question. I'm not attacking you in any way. I am just frustrated because it was a stupid day. It was a stupid timing. It got me. Any other questions? All right. If not, I'm going to call it a day. Appreciate you guys being here. Look forward to seeing you on Monday. And Abraham, if you would please send that information, I'd appreciate it. And Lee Maxwell, if you don't mind, I'm going to send you a quick phone number so that you can also give me a quick, so that you can give me a quick call here when we're done. So Lee, copy down that phone number. That's my everyday one that you've been getting a hold of me anyway. But guys, I appreciate you being here today. I'm going to get this posted as quickly as I can. Please do send that email. I'm very interested in what you're seeing, Abraham. And guys, until next Monday, we'll have protection on. We'll be protected. We'll be in good shape. I'll talk with you all later. Bye-bye.